Hey guys, this is Martin Perdomo, the Elite Strategist, and you're listening to Latinos in Real Estate Investing podcast. And today we're going to be talking about creative deal structures. And I have someone that's really good at creating creative deals. And in this market that we're currently in and we're headed towards winter, literally and figuratively in business, right? Literally, we're going into winter months, which tends to, if you're flipping and stuff like that, tends to be a little bit harder. And figuratively, within the business cycle of winter, I believe we're in a recession. Real estate has slowed down dramatically. Inventory is ballooning. We're seeing price reductions all over the place. 30% of all properties on the market have been reduced. Their prices have been reduced. So anyways, I'm really excited to have Dombeck here. Derek has been a successful investor since 2003. He's been through the ups and downs of the market, a couple actually, sir. And Derek has been involved in hundreds of transactions, actually thousands of transactions in his career. He's done wholesaling, flipping, landlording, lending, and countless other investment strategies throughout the years. One of the things that Derek specializes in is creative solutions for seller, and he also is a co-owner of Best REI Funding, which is a hard money lender. He also hosts a couple of REI meetups, such as myself, as my listeners know. I also host a couple of meetups. And Derek, welcome and thank you. First of all, thank you for being here and welcome to Latinos in Real Estate Investing podcast. I'm glad to be able to have this conversation with you and kind of talk shop with you about real estate, what the market is, creativity, because we're going to need a lot of creativities. We all have limited resources. Welcome to the show. Thank you for being here. And I know that I didn't do enough justice with my intro to you. So please tell us a little bit about yourself and some of the other things that you're doing.
Well, thank you, Martin, for having me. First of all, I really appreciate it. You did a great job introducing me. I always get a little bit humbled when I get introed because myself, I started out in 2003, but I was just a construction worker like anybody else. So a lot of times when I'm getting interviewed or I'm hosting one of our events, I don't sometimes feel like I should get this big fancy intro because I'm just a regular Joe like anybody else. We've been involved in a lot of different scenarios. The market's going up and down. Starting out in 2003, my wife and I bought a couple fixer-upper properties. We live in Wisconsin. So, we had bought those. You talk about winter coming. We absolutely know what that's all about because we have it about 11 months a year. But we had a couple fixer-upper properties, and then we also got involved in buying and selling in the Florida market at the same time when we were brand new. So our first transactions, we essentially did 4 of them within the first month, 2 of them in Wisconsin, 2 of them in Florida. And everything went really well until, late 2006 as the markets crashed. And back then, Martin, we didn't know any better. We thought we were really intelligent real estate investors. We didn't know squat. But we used banks for everything. We had good jobs. We had good credit. Banks would throw money at my wife and I. And ultimately, short version of a long story, we lost damn near everything. Markets crashed. We had about a $4 million portfolio, which was made up of about 29 doors, and we pretty much lost all of that.
What was your biggest lesson through that crash and through losing damn near everything?
We had no control over our business. The banks controlled everything. Our properties in Wisconsin were cash flowing just fine. The properties in Florida that were at the time we did the deals were only leveraged to 80%, maybe 90%. In some cases, but we weren't over leveraged at 125% like a lot of people back then, but we had no control. Once the market started crashing, the banks just would not work with us. Commercial loans, they call them due, call their lines of credit due. All of this was beyond our control. And
so where was the hardship, right? So I'm still looking for the hardship. Where was the hardship within that time? So you had all of these doors. The market crashed. right? Back then, 6, 7, and 8 really was when it crashed.
Mhm.
Where was the hardship? So you owned these doors. Were these flips or were these rentals at the time?
So everything was rentals at the time. The Florida real estate, we were building new construction, and we were, for the most part, we were building new construction. We bought a couple of existing properties, and we were lease optioning these properties to a future end buyer, but we got caught with several properties still under the construction phase, which we couldn't get a certificate of occupancy. We couldn't finish the houses because our construction loans were designed to give us the final draw once we received the certificate of occupancy, which we couldn't get because contractors were shutting their doors. Everybody was shutting down. And so we ended up in a position where we had huge negative cash flows because those properties were vacant. Some of them weren't even halfway through their construction. And then the other unintended consequence, which this drives me crazy to this day, Martin, we had put a line of credit against our personal property to use as short-term, money to put as down payments or use for fix-up money or whatever, right? And that's where I say we were fortunate we didn't lose our personal house, because I've been seeing this for the last few years, people on different web forums talking about, go put a line of credit against your house. It's cheap money. You've got this as accessible and it's quick and easy. That's not something that I would ever advise anybody do at this point, because that's your personal house.
Yep.
If you screw up, it's gone. That's one of our bigger lessons. So after we got through that, it was either, quit, which.
So how did you get through that? Like, how did you unravel that situation?
We started buying and selling and flipping properties. We took on a partner who had good credit because, again, I didn't know any other way other than using banks. So we took on a partner. That partner was getting the bank loans. We were flipping properties, splitting proceeds 50-50. But I was just chasing, bad debt with the profits that we could pull off of these flips. And we did that for several years, just trying to get caught up, rob from Peter to pay Paul, long enough to try and bring in more money. And ultimately, it still ended up in bankruptcy at the end of it. So
sorry you went through that.
I was too. I was embarrassed. I was very embarrassed. I didn't tell a soul. We hid it from the world as best we could. Now looking back, that was such a blessing in disguise. Everything we went through was such a blessing. I get to educate people now. I host 3 national masterminds currently of people from all over the country that, we all sit together and we actually rent a house together every 6 months, big house, somewhere different. We get to travel and we're helping each other. We're collaborating based off of our experiences. So that's part of it. We wouldn't have had that blessing today if we hadn't gone through that shit back then. But it didn't feel like a blessing back then.
Mm-hmm.
So fast forward a little bit, I met my current business partner in about 2011, 2012.
Before you tell me about that, if you don't mind, about your business partner, and I want to hear about that. I want to ask you, because like we said, we're headed into winter in business, right? Mm-hmm. The economy, I believe we're in a recession, although the economists are not saying today. By the way, as of the recording of this podcast, the new unemployment numbers come out. This should have came out already, and so it'll officially, we'll see what they say about unemployment. But what resemblances do you see from your experience, right? Mm-hmm. This Derek here today, looking back to what you. Because I personally wasn't flipping in those times, right? I was in the mortgage business at that time. I bought my first investment in 7. So you kind of got some leeway on me here. So more experience on me here. What personally can you tell the younger Derek, right? Or can this Derek look back at what happened here, and what resemblances do you see in this market to those things that happen? And what kind of warning signs would you tell someone listening right now? Like, hey, this is where I screwed up. And these are some of the things these are some of the patterns that I see that are similar that I would watch out for if someone was listening, coming from your experience, filing bankruptcy and going through all of that. What danger zones can someone like me or someone listening can avoid based on what you learned?
So I never paid attention to other markets or other types of investment products like, stocks, bonds, the commodities, gold, silver, oil. Never paid attention to any of that back then. And I think that was a huge mistake, because right now oil is at a really high price. Obviously, everybody sees it at the gas pumps. But what else does that affect? Well, that affects any of your building materials that are made out of petroleum. So vinyls, plastics, shingles, all of that is high because the oil price is high. Okay. So I like to keep an eye on that and track that. We track the lumber futures. I just saw a report this week that the futures on lumber, which is figured out in board feet, but that is at its lowest it's been in months. Its peak was May 31st. So we're starting to see 2x4s, lumber, plywood, sheeting, that stuff is starting to drop and is trending to continue to drop.
Finally.
Why is that important? Well, it's important because new construction builds, which have been very expensive, have made, buying an existing house and flipping an existing house, a safer, I believe, a safer and a faster way to, make profit. I'm not a fan of new construction anyways, only because of what we went through back when we were building spec homes. And, the friends of mine that I have that are in that new construction space right now, currently, are freaking out. They are not having a very good couple of months recently here. But the other thing I think that people need to look at is stay out of short-term debt if you can. Get fixed rates. There's a lot of people that go to commercial lenders and get 3-year balloon, 5-year balloon type of products. They're very risky. I knew people that had performing portfolios of hotels, apartment complexes, all these commercial properties, that their loans came due in 2009, 10, and 11, and they were cash flowing. Their numbers looked fine. The banks absolutely refused to rewrite those loans. It wasn't because the properties weren't good. It was because the banks were not in a good position. And their regulators, which they'll never tell you, their regulators tell them what percentage of their funds can go out in any sector of lending. And if they're heavy in the commercial space and the regulators come in and say, well, you need to get rid of 25% of your commercial debt and get it into consumer, car loans or, some other sector, they don't have a choice. So that's where I said earlier, using banks only, you have zero control over your business unless you can get into, long-term 20, 30-year fixed type of debt. I tend to stay away from banks almost exclusively. We hardly use a bank for anything today.
Not even on refinances and to refinance them into long-term?
Nope. I don't. I do not want to be a slave to the bank.
That sound advice. Thank you for sharing that with me and the listeners. So now tell me about fast forward. Now you have you met your partner.
Yeah, so this is when my mindset started to shift. So when I met Jeff, he was hosting the Real Estate Investor Association in Green Bay, Wisconsin. It's where I met him. We got talking over a period of a couple of months. We ended up deciding to go to a conference together. Consequently, it was on hard money. But at that conference and that trip, we got to spend 4 days together. And that's where I really discovered he had never used a bank for any investment ever. And he had started about a year and a half after I did. So that 2004 timeframe, never used a bank ever. he had always raised private money for every transaction he ever did. And he had started dabbling in lending, kind of as a side gig. It wasn't anything that he was focused on, but he would do a couple loans here and there. And do that by using private investors' capital, paying that private investor, like currently we pay our investors 9%. We lend it out at 12 or 13%, depending on where we're lending it. So it's an arbitrage play. The mindset shift for me, though, was I always felt guilty trying to walk up to somebody and ask them to use their money. And I thought, why would anybody ever do that, right? I'm a credit risk. I have a foreclosure or a bankruptcy and foreclosures on my credit. Why would anybody do this? The mindset shift was you're giving that person an opportunity to make a return on their money that they may not have in any other way to get 8, 9, 10% returns on their money. Many of our investors were, sitting in a bank CD or in a money market account, getting a 2% return. With the inflation that we've seen, they're obviously losing money. Their dollars are losing value. So that shift was huge. The other shift was, I was trained, like many of us, to just have a goal of getting 100, doors, manage 100 doors that made $100 per door and make $10,000 a month, and I'd live the good life. Like that was the pitch back in 2003, right? I hear that same pitch today in 2022.
Mm-hmm.
Get 100 doors, get $100 per door, make $10,000 a month. Well, $10,000 a month isn't squat compared to what it was back then.
Yeah.
But I don't love that advice. And it's a 40-hour-a-week job minimum to manage 100 doors compared to managing 100 doors. That was the mindset shift. So, and that's what I got from my business partner, Jeff. And so, and the answer is, an hour, 2 hours at most a week. So, and the lender has all the control. So we knew that we were going to grow our lending company, but at the same time, I had to get good at creative deal structuring. And I had to get good at sitting at the kitchen table with sellers and solving their problems. The benefit was I had been through a lot of the same problems. So I could sit there eyeball to eyeball, and they knew I wasn't lying to them. They knew I had been there, because I'll tell them, I've been through foreclosure. I know how you feel. I know which, there's certain different things you go through when you're in a foreclosure. First, it kind of starts out as anger, then you're feeling sorry for yourself, then you're feeling shame. So I've felt all these things. So we got really good at talking to people. I got really good at talking to people and getting them to open up about what they truly needed. And once I know what a home seller truly needs, I can just solve for that problem, solve for X, right? So for example, today people are freaking out over interest rates increasing. Well, that's a great opportunity for us as investors to start using subject to purchases. Buying property with fixed rate mortgages at 2.5% for another 29, 28, 27 years left on them, right? Using options. I love using options. I can go in and control a property, have the right to buy the property, but not have the financial expense of owning the property until I find an exit strategy for it. For an example, we bought a property, didn't buy it. Actually, let me correct that. We control the property with an option. This was a ranch house, 3-bedroom, 2-bath ranch house. And the seller had 2 different mortgages on it. My cash offer was about $120,000. That didn't make him happy, didn't clear the debt. And I said, well, what if I give you you give me an option to purchase it for $150,000 and give me 6 months? Okay. No different than if you listed it with a realtor. I'm going to come in with my money. I'm going to fix up the house. I'm going to do the things that you do not want to do. He told me, I don't want to spend any money on this house. It had some seepage in the basement, had some, just not a lot of stuff, pretty minor, but things that would would trip up a home inspection. Okay. So, and I said, in order for me to do that, I need a lease to have use of the building. I'm not going to live there, but I need to be able to have access to the building, right? So I need a lease and the option. And he said, yeah, I can do that. Because he was moving. He was retiring. He was moving out of state, just wanted out. So all he wanted for the lease payment monthly was to cover the real estate taxes. My monthly lease payment was $220.
Wow.
Okay. So he was going to pay his own mortgage. Why? Because he was going to have to pay his mortgage if he listed it with a realtor, right? So actually, initially the lease was going to be zero, but he stiff armed me into $220 a month. I felt like I could do that, and I would take care of the utilities. Utilities would go into my name. So the story goes like this: he retired. We signed the option and the lease. He moved away. We went in 5 days' time. We corrected all of the challenges that he did not want to correct. Cost me about $2,000. So at this point, he had the first month's rent of $220. That's all he had in his pocket, and a piece of paper. I had the keys to the house. We stuck $2,000 into the property. I listed it on the MLS for $200,000. We had 14 showings within the first 24 hours, but I accepted an offer from the very first people that came through. They were just the best offer and the most sound offer of asking price. I didn't get into a highest and best. I didn't want to play that game. They gave me what I wanted. That's what I respect and honor. And we closed it 28 days later. So I only made 2 rent payments. I had $2,000 out of pocket plus 2 rent payments plus 1 month's utilities cost. So let's call that, I don't know, $2,800 out of pocket. I never owned the property, and I'll explain that in a second. But my profit, after paying my realtor commissions and everything else, I profited $36,000 without ever owning the property. In this market, in this, hottest selling market we've seen in years, right? This is not something I did 10 years ago. Here's a key point though, Martin, because you got to protect yourself. When I get an option on a property, I want that option secured with a mortgage or a deed of trust, depending on your state. Martin, what state are you in?
Pennsylvania.
Pennsylvania. Okay. Are you deed of trust or a mortgage state?
Deed of both, or you could do, it's a mortgage state. Mortgage state.
Okay.
Yeah, mortgage state.
Very few people know this or understand this, and I hope your listeners will, take this to heart. A mortgage is nothing more than a security instrument. It can secure a note, a promissory note, which is what it typically does, but it can also secure an option. It can secure a lease. It can secure a purchase contract. It can secure anything, because what it's doing is tying the property to that promise, whatever that promise was. So in this case, the guy's name was Randy. Randy is giving me the right, which is an option, to purchase the property for $150,000. And he's pledging the property essentially as collateral, using a mortgage document, so that if he refused to sell me that property for $150,000, I can force him using the mortgage. I could foreclose using the mortgage. What most attorneys will tell you, and I had this discussion with Randy's attorney, and Randy's attorney advised him not to do this deal, and he did it anyway. But typically you would get an option and you would record that option on public record. And that's totally fine. And that's what most people should do and would do, right? The challenge with that is, what happens if Randy all of a sudden decides to grow a brain or whatever and doesn't want to honor his promise to sell me the house for $150,000 because he sees it on the MLS for $200,000 a week later, right? He could get butthurt over that and say, oh, I'm not selling you that for $150,000, right?
Yeah.
So what's my recourse? My recourse is I have to go file a lawsuit go in front of a judge and argue over contract law. The judge is going to look at our option contract and make a determination of what they think it meant. Versus I file a foreclosure action, there is no gray area in foreclosure. Randy pledged his property as collateral. He's now refusing to let me exercise my option. There's no gray area. I have the right to foreclose and take the property away from him. Now, I would be foreclosing subject to the underlying debt or the creditors that are ahead of me. So I would have to pay off his other two mortgages, but that's fine. So we use the mortgage to secure our option every time. I also get a power of attorney for the property specifically from the seller every time. And here's why. In that story, when it came time to sell that property on the MLS, I listed the property as Randy's power of attorney. I sold the property as Randy's power of attorney. So it was actually Randy selling it direct to my end buyer. How did I get paid? Well, I could have just said I'm selling my option, but instead on the closing statement, I was a mortgage payoff because I have a mortgage. So the settlement statement simply showed Randy paying off his first mortgage, his second mortgage, and his third mortgage. He got the proceeds from, $150,000 and below, minus those two mortgages. I got the proceeds $150,000 and above, which netted $36,000.
Nice.
That makes sense?
Very nice. Yeah, it makes a lot of sense. Thank you for that. That, man, I feel smarter for listening to you.
Let me help you with
Yeah,
one
go
more
ahead.
thing, Martin, because this is important. If that end buyer is using any kind of government-backed financing like FHA that has title seasoning issues, that's where that strategy really pays off. Because if I wanted to double close, which would be the other possibility, where I buy it from Randy and 5 minutes later I sell it to my buyer, now you have title seasoning issues. They can't use FHA financing or some of the other government-backed products. That's where having the power of attorney to sell direct from Randy to my buyer takes care of that.
That's brilliant. I mean, you obviously know your stuff, Derek. Thank you so much. We're headed into, like we said, I keep mentioning this, the third time I mentioned this, we're headed into winter here, and learning and understanding these strategies are going to be key essential components, I believe, to succeeding in the upcoming markets. How did you learn these things, right? So I've never done subject twos, right? I've had some subject two guys here, subject matter experts like yourself, and others. Like I said, thank you, because I feel smarter for listening to you. I just, I don't know everything. What I know is really how much I don't know, right? And this could be really complicated for some people, but it's really not if it's put in a step-by-step. A step-by-step thing. Tell me, how did you learn? How did you come across this? How did you get this information? Because, we live in the information age, yet we're overloaded with information and too much information, and people don't take action. Usually we got information accessible at our fingertips, right? All of us do, right? Yeah, we're getting too much, and so many of us are living mediocre lives, poor, broke, right? And we have so much information. How did you come across this? How did you learn this? And how did you muster up the courage to go ahead and take action? Talk to me about that.
Well, some of it, Martin, is when your back's against the wall, you don't have a choice, you come out swinging. So that was a lot of it. I mean, it really was. It was born out of necessity. My credit shot. Nobody would touch me as a banker. I'm not going to quit. So I got to figure it out. We started, how do I explain this? The first 8 years in business, I would say I was a closet investor. I didn't tell the world what I did. I didn't seek other people that were doing it. I would go to seminars, but I didn't stay in touch with anybody. I didn't build a network. The second phase of my investing career has all been about building a network, seeking others that have already done it, been there, and are willing to share, going to conferences, but actively networking with people, and then staying in touch, following up. So we got around a network of really intelligent, creative deal structures and became close personal friends with them over the years. And it's actually, I'll tell you all about it towards the end, but we now run a conference that we took over their conference that they had done for 8 years. We had gone to 7 of the 8. And it was at these conferences and through these conversations that we actually started our first mastermind group on a national level, because it was just a group of friends from all over the country. And the reason that's important is because if you try and do this locally in your town in Pennsylvania, people are going to share, but they're going to hold back. They're not going to share everything because you're in a competing market. When you are in a group of people from all different corners of the United States, nobody holds back because we're not competing with each other. And so now let's say you come across a deal, a lead comes across your desk, Martin, and it's something you've never done with a subject to, but you've got this network that you can pick up the phone and call, and they're going to say, get it under contract and I'll help you through it.
Beautiful.
No charge. They don't want a piece of the pie. They are just there to help you, and you're there to help them when they need it. That is how we learned. Trial and error is expensive. Building your network, getting the people that have done it already to shortcut it. But I've spent lots of money with gurus, and that is not bad. But typically, if I spend $1,000, $5,000, $10,000 on a program, the information is good, but there's no follow through, right? It's all 100% on you. I learn better by doing. Some people learn better by reading. Some are, right? I learn better by doing. Dive in, figure it out as I go, but I don't want to make all the mistakes along the way. So I want to be able to have that network to reach out to and ask those questions.
Amazing. So I'm thinking that what I'm thinking right now is probably what most of my listeners are thinking. They're like, hey, this is amazing information. And how do I get in these, how do I get in these programs, right? How do I get into your mastermind? How do I get into your, into that group? How do I get to your next event? I know you have a giveaway here. And so if people wanted to get in touch with you, Derek, and they wanted to learn from you and learn these amazing strategies, and by the way, folks, if you're listening or watching this video on YouTube, this is some things that you better beef up your skills on, right? You guys know I'm always talking about 80% mindset, 20% skill set equals 100% success. This is one skill set that I highly recommend that we all as investors learn, because there's going to be a tremendous amount of opportunities. In my opinion, there's going to be a tremendous amount of opportunities here in the next 12, 18, maybe 24 months with the interest rates going up and everything happening in the market. So if someone is really like committed and wants to learn from you, Derek, tell me, where can people reach you? How can people find you? How do people get involved with you? How do people get involved in this community and learn from you?
So I'm going to give you one source that I don't control, and I make zero money off of it. I'm not trying to pitch anything to anybody. This website is run by a good friend of mine and mentor of mine. His name is Bill Cook. It's called cashflowdepot.com. Cashflowdepot.com. It is a paid site. It's ridiculously cheap. It's not much money at all. This is where all of the information, all the content from my mentors, where I learned all of this stuff. A gentleman by the name of Peter Fortunato, Dykes Bodiford, David Tilney, Bill Cook, and others. All of their information is at this one website. There is, coaching calls, all this is archived. Coaching calls, actual courses, documents, forms, anything you would ever want to know about sub-2 options, master leasing, anything creative that you can think of, it's there. Okay. These were my mentors, and now these are my friends. And consequently, most of these guys are in their 70s, but that's the people that I seem to have gotten along with the best. Okay. Myself, I'm passionate about this. I love deal structuring. I love talking to people about it. We do run a national conference once a year. The next one happens to be in Cancun, Mexico, February of 2023. It's called the Generations of Wealth. And the website is gowvoyage.com. But what I love about this, and this was the conference we took over that Bill Cook, Dyke Spotiford, and Peter Fortunato used to run. It used to be on a cruise ship. Our goal is to get it back on a cruise ship, but COVID. So, but we changed it up when we took it over to 1 degree. We encourage you to bring your children, especially your children 10 and older. We will not charge you for them to attend the conference. This is an advanced strategies conference. I bring in about 10 speakers. Nobody's pitching anything. Nobody's selling anything. We have conference from 9 till 1 each day. It's a 5-day conference. Then the afternoon into the evening is all networking, hanging out at the pool, whatever you want to do. We have an open town hall session in the evening, which is more interactive, which is totally optional. And we do that for 5 days. And what the kids get out of this, they're not, and honestly, last year, a dozen of them sat through every presentation.
Wow.
It's going over their head. But what the kids are getting that I love and I'm so passionate about is they're building a network of people that I wasn't smart enough to build until I was in my 30s. They're doing it in their teens. And they're hanging out with other kids who have parents that are freaks like us, that don't think the way the rest of the world thinks.
Yeah.
And it's so cool to watch. I think we had 18 kids last February. And to see them hanging out in the pool, my kids have friends from Colorado, Georgia, Florida, Indiana, right? And they all hang out and stay in touch with each other and Snapchat and all these other things that kids do, right? So you can tell in my voice, I'm passionate about it, Martin. I'd love to have y'all. It's not a huge price point. It's $1,000 for the week right now. And that price is going to go up, but that's our early bird price. Other than that, I'm also in the process of writing a book and co-authoring a second book, and they're going to be out November, December. One of them is specifically on private lending, and the other one is a collaboration with about 30 other really awesome authors from around the country. And I'd love to give it to your listeners for free, the electronic version, when it comes out. All you got to do is send me an email. Tell me you heard me on Martin's podcast, put me on the list for the free book when it comes out. And as soon as it's out, I'll have my assistant just hit send, and everybody that's on an email list will get those free books. And that's my personal email address, which I monitor myself. My first name, Derek, DEREK, at bestreifunding.com. And I just really appreciate you having me on and giving me the opportunity to help your listeners in any way I could.
My friend, thank you so much. This was an honor. It was my pleasure to have you on. Like I told you at the beginning off air, I like to bring on guests that I can personally learn from. And like I said earlier, I feel much more smarter, much more intelligent just spending this last 30 minutes here with you. Thank you so much, sir. Really appreciate you. I'm really, really grateful for you sharing your wisdom, your knowledge, your story, which is an amazing story, by the way.
Thank you.
With us, with me and my listeners. Thank you so much for all of that. And me and all of my listeners are smarter for having spent this time with you. Guys, reach out to Derek here if you want to learn more on creative financing. And I mean, the man spoke for himself here. You learned a ton from him. I learned a ton from him. Thank you all again for watching and or listening to Latinos in Real Estate Investing podcast. If you are here for the first time, or even if you're not here for the first time, make sure you like and subscribe. Make sure you drop us a positive review. Let's discuss it. If you're watching this on YouTube, if you're listening to this podcast, just give us a thumbs up, like it, share it. If there's someone that you know that needs to hear this information, make sure you share it with them. And lastly, make sure you check out Derek's websites. I think he mentioned cashflowdepot.com. I'm personally going to go and check that out. I'm going to publicly say it here. I'm personally going to go check that out. And I know that my team and I have to get better at creative financing deal. This was why I was so excited to have you on this show, Derek, because that's something that my team and I need to get better at. I believe there's going to be a ton of opportunities up here coming up in this market, and it's time to beef up those skills. The market saved us quite a handful of times last year and the year before. And guys, just know that the market is not coming to save us anymore. It's going to take skills, it's going to take strategy, it's going to take intelligence, it's going to take massive action, it's going to take being around people like Derek, listening to people like Derek, attending conferences like Derek's, reading books like the one that Derek is putting out with his co-authors and the ones he's putting himself, that he's writing himself. And again, sir, thank you very much. I really appreciate you coming here. I salute you for all the stuff you're doing. And thank you, man. Thank you. You know, I'm gonna share this with you. I have a journal that I use this every morning, part of my ritual, where I write my gratitude, 3 things I'm grateful for every morning. And I'm finding myself, the older I get and the longer I'm in business, to be grateful to people like yourself. Like, you know, I'm listening to a book by one of my mentors, because I studied with him, Keith Cunningham, which is actually the rich dad from Rich Dad Poor Dad. I don't know if you know that.
Yep.
Keith Cunningham, and The Road Less Stupid he wrote. And, you know, and my current mentor, Don, the CEO of DLP. And I just find myself being grateful to guys like that, right? Grateful to guys like you that are out here sharing what you've learned and your experience and your story, man. Thank you so much for that. I try to do the same. And I'm just really grateful for guys like you writing a book, sharing your wisdom, sharing your knowledge, taking the risk, taking the chance, coming on podcasts like this, then just sharing. Thank you, sir. I really, really, really mean that. Your contribution to the world is acknowledged. I want to personally acknowledge that. And the universe and God is watching what you're doing. So thank you.
It's my honor. And when I said it was a blessing in disguise, I now know it was a blessing in disguise, and I know that I want to help people and share. So thank you for having me on, because I can't get this out and share without people like you bringing us on to talk. Yeah. So thank you.
Yeah, you're welcome, brother. It was my pleasure to have you. And again, I look forward to having you back here again, you know, hopefully sometime next year, when winter's really here, literally and figuratively, as we started, you can come back on here and you can tell us, hey, what you're doing, what's working. I love to stay connected with you. Let's stay connected. Thank you so much, brother. Guys, thank you for listening, and we'll see you soon. Peace out. So guys, if you like this video you just watched, click on this video up here. It might be something you might like. And guys, I really appreciate you guys watching. Remember to like and subscribe to our channel. We really appreciate it. Thank you very much. Peace out.